Is there a light at the end of the tunnel? We're living in interesting times. Now, there's a discussion whether that saying, may you live in interesting times, is a blessing or a curse. But at present, we are in interesting, challenging times. So let's get an understanding of the latest statistics, what they're showing us, and what could be ahead with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. Welcome, Andrew.
Good morning, Michael.
Well, property values seem to be holding their own. It doesn't look like there's a property crash that some people were predicting. And you've got a number of indices that give us an in-time indication of what's going on. Your new one on property listings is quite insightful, and we're having a look at it on the screen now. There's a slight uptick, Andrew.
Yeah, the seasonal effect of Easter is now behind us, Mike, and this index looks at the number of new listings that have come into the market over the past week, and that takes out any of the daily seasonal effects. But of course, we do have the normal seasonal effects, and Easter had a significant impact, predictably, on new listings coming through. Now we're starting to see that seasonal effect ease, and we can see from the index that it's now pushing back up after that Easter trough. Interestingly, Michael, that although it's certainly higher than where it was a week ago, the underlying trend over the past few days, although higher than the Easter trough, is certainly starting to wane again. And even though the index is still above 60, it's looking like it'll head down into the 50s again. We shouldn't be surprised, firstly, of course, because confidence is still an issue in the housing market. And also we are moving into traditionally our next seasonal impact on the market, which is the winter market. And of course, we do have significantly fewer listings coming into the market through the winter periods. And when we compare it to a year ago, we're still around about 25% lower in terms of new listings coming into the market. But numbers are still quite reasonable, Michael. It certainly hasn't been a complete shutdown. And I think numbers down by 20% compared to a year ago, given the circumstances, is a pretty fair result and doesn't show, I believe, a crash in confidence in the housing market.
Clearly, there are still transactions occurring and people are bringing their properties onto the market and buyers are in the market. We're now looking at how this is broken up state by state. And we can see that, in fact, in all states, there's been a slightly higher listing of new properties.
We can see that Sydney and Brisbane are the underperformers there in terms of that relative measure.
How does that translate to asking prices? Because are people putting their properties on the market at bargain prices just to move them, or do they still have confidence, Andrew?
Well, asking prices have generally eased, Michael, but not noticeably. Sydney's the exception. Asking prices since the onset of the coronavirus shutdown are down by just under 2% in Sydney. This is for houses. And look, other capitals are just above and just below the line, so nothing really significant there. It will take some time to get the true price impact. Certainly there's no shakeout in terms of prices. And I think the market's really performed quite rationally and reasonably, Michael. We've moved past the real scare environment in terms of the coronavirus issue. There's no doubt that confidence is growing, that we will be back to work sooner rather than later.
Interestingly, on the ground at Metropole, we've experienced more buyer inquiry than we have for a long, long time. And in general, they're not home buyers, but they're investors and investors with a long-term perspective. And I guess they've got secure jobs. Sure, unemployment's rising. And even if it gets to 20%, if you take into account the unemployed, the truly unemployed and the underemployed, that means there's still, I guess, 80% of the population with a level of job security. And there's clearly a lot of investors, Andrew, that have a long-term focus. They're interested in getting into the market. They're interested in taking advantage of this window of opportunity. But we're not actually seeing people interested in selling. A year ago, 18 months ago, prior to the election, many property investors, they were getting nervous. They were keen to sell. They were looking for opportunities to get out before the proposed changes. But I agree with you that currently I think we're seeing a lot of people seeing a light at the end of the tunnel. They're obviously nervous, but they're not nervous enough to say, I'm getting out of the market. They see that there is a light there.
Well, lessons learned from a year ago, which is quite recent, Michael, and that was we're in the same position a year ago. Irrational predictions of up to 30% fall in house prices last year, and those widespread doom and gloom predictions certainly proved to be completely wrong.
While prices aren't dropping, clearly the number of transactions have reduced. And so therefore, people are saying, oh, look, the market's crashing because people aren't transacting. I think, as you correctly say, it's a sensible reaction. It's not an overreaction.
Yes.
It's not a panic reaction. But what's happening to the number of transactions occurring at the moment, Andrew?
Well, my housing market has a new index, Michael, which now tracks the number of sales on a weekly basis. And you can see that that sales index follows the listings index. So this is telling us the number of transactions. This is total sales, total transactions, inclusive of auctions and private sales. And the breakdowns do show us, however, when we look just at private sale numbers, they're still coming through at quite a steady rate, similar actually to the listings index, and have obviously started to pick up over the last week now that we have Easter behind us. Again, as you suggested, Michael, quite a reasonable response from the market.
Transactions are still occurring. Buyers have adapted. Estate agents have adapted. And we are seeing a light at the end of the tunnel. Restrictions are being loosened. In general, in the world, we're able to get out a little bit more in most states. In your state, New South Wales, you're allowed to. In other states, in Victoria, they've still locked us down a bit harder, Andrew.
Yeah.
And Pam's getting upset. She can't play golf. If she lived in New South Wales or Queensland, she could. But I think we're all seeing we're getting over it. We're getting through it.
Of course, the hard yards that have come in terms of the economy, that will have an impact on our lives going forward for quite some time. And we need to be quite sober about the longer term impact that these restrictions have had. And hopefully we can get them eased sooner rather than later. And that's in all states, Michael, because as I said, the hard yards are to come.
Yes, some interesting times ahead, just like we said at the beginning of our chat today, but we'll be back once a week to look at these great new indexes to give us a better in-time indication of what's happening. And next week at the beginning of the month, we'll have our monthly Around Australia catch-up with much more detail about what's happening, Andrew.
Thank you, Michael.